Hello everyone, here are the latest market news on March the 10th, 2020. Oil rises, investors expect price war resolving. Oil prices bounced 8% on Tuesday from the biggest one-day decline in nearly 30 years, as investors rely on the possibility of economic stimulus to resolve price war between Russia and Saudi Arabia, and as new virus cases slowed in China. Brent crude futures rose by $2.85 or 8.3% to $37.21 a barrel, while U.S. West Texas Intermediate crude gained $2.46 or 7.9% to $33.59 a barrel. Both benchmarks plunged 25% on Monday, dropping to their lowest since February 2016 and recording the biggest one-day percentage decline since the 1991 Gulf War. Prices dropped as Saudi Arabia and Russia began a price war after Moscow had refused to support the Organization of the Petroleum Exporting Countries in making the deeper oil cut to cope with a substantial fall in demand. In response, Saudi Arabia said it will boost its crude output about 10 million barrels per day, also slashing its export prices. According to Goldman Sachs Group Inc., such moves could push crude prices to $30 a barrel in the second and third quarters. Global markets rebound amid stimulus hopes. Global markets recovered on Tuesday after posting the biggest multi-year lows during the previous session. Hopes that global policymakers would introduce coordinated stimulus to offset the economic impact of a coronavirus outbreak maintained financial markets. On Monday, the Dow Jones Industrial Average fell 7.79% to 23,851.02. The S&P 500 dropped 7.60% to 2,746.56, and the Nasdaq Composite tumbled 7.29% to 7,950.68, marking the biggest one-day losses since the 2008 financial crisis. Although today U.S. stocks repaired some damage, with the S&P 500 E-minis at a 3.43% to 2,842. In early European trades, the pan-region Eurostoxx 50 futures were up 2.72%, while German DAX and FTSE futures climbed 2.41% and 3.14% respectively. The gains in the U.S. and European futures came amid a 1.36% rise in MSCI's broadest index of Asia-Pacific shares outside Japan, which lost more than 5% on Monday. U.S. Blackstone plans to take SOHO China private. Blackstone Group Inc. is in exclusive talks to take SOHO China Ltd. private in a $4 billion deal. This agreement is one of the biggest bets on the Chinese market. The U.S. private equity firm entered exclusive discussions in early February with Hong Kong-listed SOHO China, a major prime office developer in China. The U.S. firm offered $6 Hong Kong dollars, $0.77 per share, to take the company private. The price represents an almost 1% premium to the 3.03 Hong Kong dollars average price of SOHO China's shares in January. Following the report, SOHO China's shares jumped 39.9% to 4.17 Hong Kong dollars, marking their highest since June 2018. The details of privatizing SOHO China, founded in 1995 by Chairman Pan Xi and Chief Executive Zhang Xin, are expected to be finalized in the coming weeks. Japan continues to support its economy. Japan's government plans to spend 430.8 billion yen, $4.1 billion, in a second package of steps to cope with the fallout of the coronavirus outbreak, two government sources with direct knowledge of the matter told on Tuesday. The government also plans to adopt fiscal measures totaling 1.6 trillion yen to support corporate financing. The package underscores the pressure on policymakers to shore up fragile growth and stem the risk of corporate bankruptcies, as event cancellations and a tourism slump threaten to hit the economy hard.